Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, August 31st, 2010. Well, folks, the markets are trading slightly to the upside, but it is a very tenuous hold on positive territory today as the markets initially gapped lower and then surged up on positive economic news. We had Chicago PMI, we had consumer confidence coming out 9:45 and 10 o'clock respectively, and those boosted the market up. You can see initially we were gapping down pretty solidly here, all the way down to key supports at 104.50 to 60 and the 105 level. We gapped below 105, went right into the 104.60 level, and then reversed on that Chicago PMI. Chicago PMI came out a little better than market expected, and ultimately it caused a surge. Then you had a pause into 10 o'clock. Consumer confidence came out much better than expected, and the markets took off to the upside, going positive on the day. This is where the market closed yesterday. You can see this little last candle of the day close, and this is where the market is trading today. So fractionally positive, this 105.80 to 85 level, which has been a key level on the charts. For those of you looking back at the last couple days' videos, you can see how key of a level it has been. Obviously, yesterday we came right into it right here and bounced off of it. If we go back even further, you can see very, very important level. Paused right here, broke through. We consolidated right on it right here. And going back even further, we consolidated right along it right here. And I could even go back even further, folks. I mean, this level literally takes back all the way to this little pivot going back to July. This is mid-July, and you can see how key this line has been all the way even back to late June. Late June, gap down, little pivot high right there, all the way through. So this level obviously is huge. The markets continue to gyrate all along it, and they continue to try to get through, but just not having a lot of luck, frankly. You can see it's hit it basically 1, 2, 3, 4, 5, 6, 7, 8 times today at least on the 10-minute intraday SPY chart and have yet to break through. Now, overall, the markets, as I said, are on the positive side. We have the Dow up about 23.5 points. NASDAQ is down 75 cents, and the S&P is up about 2 points. So about a 0.25% gain on the Dow and S&P, while the NASDAQ is flat to slightly negative. Markets are seeing a little bit of selling. We just got the Federal Reserve minutes out. All right, the Fed minutes out just came out about 15 minutes ago. The market initially went up, it went down, it went up, it went down. Now it looks like we are seeing some sellers emerge here to the downside, and we're seeing the markets coming down a little bit more. Very, very quiet trading, folks. This morning we had good volume in the market on this gap down and surge on the PMI and the consumer confidence, but look at how the volume has just died out now. A little bit of a surge on the Fed minutes numbers that just came out, but we are going back to the lighter volume trading. Light volume generally notes neutral bias on the markets, although again, recently we have seen some downside even on light volume, as we are seeing a few players get scared and unload into the afternoon session. Yesterday was a good example of that. Very light volume yesterday, and the markets just kind of went sideways to lower all day long, ending with a little bit of a flush. You got the gap down today. All right, what else do we want to look at today? What's important today? First of all, intraday, what are the levels that you want to pay attention to? This will be a little bit of support right here. You can see on this little drop, you came right into it on this candle. Now you're retracing back into it. This will be a little bit of minor support at approximately 105.40. If you take that out, your next spot of interest will be down here at approximately 105.20, and then the next line will be the white trend line at 104.95 to 105, and then ultimately 104.60 to the downside. Is it possible this market could go back to the lows of the day today? It is possible, in all fairness. It definitely is possible. I wouldn't count anything out, but as of now, it does seem like they're trying to save this market, or at least keep it in neutral setting going into the end of this week. Remember, the thought process is you want families going on vacation this coming weekend, which is a long weekend due to the Labor Day holiday. You want the consumer, which is the family, spending money. If you crash the markets leading into that Labor Day holiday, how many people are going to feel safe and spend tons of money on that weekend? It's better to have the market go flat. No one feels panicked. They'll go out and spend, and that's the thought process behind it. Markets did just close below this 105.40 level now, which could tell us we are coming down to this level as well, folks. Keep a close eye on this. This is going to be a very, very interesting level into the afternoon session. All right. Now, again, granted, you haven't confirmed it yet. Let's go to the 60-minute chart. 60-minute chart is kind of interesting because you can see we've just been chopping for the last 2 weeks or so. Ever since you got this gap down from this point here, you've gone down, up, down, up, down, up. Now you're actually, interestingly enough, have a small bullish pattern on the intraday 60-minute. Note this. Consolidation, bullish consolidation on the 60-minute. If you go back to the 10-minute, you can kind of see it, although it's definitely not as nice looking. Here's the up move, and here's your choppy consolidation. Much better looking on the 60-minute. If you go to the daily, folks, bottom line is, it's all about this trend line. As I zoom out, going back to March 2009, this is the ultimate low hit last year in 2009 of March. Look at that connected through. This is what you're hovering on right now, folks. This is everything, and I stress that. This line right here is everything. You get below this line, all hell will break loose in this market to the downside, and as long as you stay on it or above it, the markets have a chance to stay above and rally to the upside. So watch this line. It is everything at this point in time. Now let's go back to a couple other charts. What's leading the market today? Let's first take a look at the dollar. The dollar, interestingly enough, and I'm going to zoom in just a little bit. We'll flip to the intraday. The dollar has gotten a small bid, which kind of coincides. If remember, the dollar goes the opposite way of the market. So whichever way the dollar's pushing, chances are the markets are going to go the opposite way. It's just the way it works in this market, folks. You got to get used to that. But as the dollar is moving up, look at this dollar up, and now it's up here. This is where the dollar currently is trading. So you've basically gone like this over the last two candles, and we know that the SPY, if we punch in the SPY got weak, fell down because it goes the opposite direction. What else do we have? USO. USO is having a very weak day today. Still concerns over demand, folks. I mean, bottom line is demand is crazy and key in response to where this oil trade will go. If you have demand out there, if the economy is strong, then people will want to use oil and need to use oil. Otherwise, it's no demand out there. And there's a lot of talk that we have more oil out there than ever before as availabilities are just huge. I mean, there's literally barges all over the earth covered in oil right now, or holding barrels of oil on it, and you can see oil getting hit. Now, the fantastic thing about this USO is we banked $1 on the long side out of it last week. As it bounced the first bounce, we got out of it, we yanked our profits, and now it's coming all the way back down. If you go to the daily chart here, here's your daily chart. It's coming back down. Your levels obviously will be right in this range. This will be a little bit of support, and then there's another support down here, but I'll leave that for the premium members of the Research Center to discuss and dissect. All right, and again, that's what it's all about, folks. You learn from our Research Center. Our Research Center gives you trades, obviously, but we also teach you and give you analysis that is second to none out there in the market. There's nothing else out there like that Research Center for $49.99 a month. That's it, folks. We give it all to you. You will learn, you will profit, you will do all the great things out there in this market that you need to do to make sure that whether you're a swing trader, day trader, or longer-term investor, you will have all the tools at your disposal to make the right decisions. And again, that's the Research Center. Once you can pick up the Research Center, you get everything included for $49.99 a month. All right, oil week, we just talked about that. Gold is having a good day. Why is gold having a good day? Because the markets are still fearful. That's continuing to push up gold prices. Notice this little upward move here, consolidation in spirit of bull flag. Target is obviously your 52-week highs at 123.50, and that would be where you're looking at. You're about $1.50 off of that on the GLD. And continue to note the pattern development. Consolidation sideways for an up move, and that's what you're seeing today. All right, folks, let's go back to the SPY and keep a close eye on this intraday. Let's touch on base. We are really just holding steady right at the lower range of this support area. You can see we closed below. Haven't confirmed it yet. This is your next intraday support all the way down to a double bottom. If we retrace and get above, this is your key level to watch, your 105.80 to 85. You recapture that, chances are over the next couple days, this is where you're headed. All right, enough said today, folks. Enjoy. Come join the Research Center. Come join the chat room at inthemoneystocks.com. Let's make some more money. That's what I'll be doing there. Take care.